What's going on, guys? Welcome to another episode of The Real Impact. I'm your host, Austin Rice. We got a good one lined up for you guys today. So be sure, if you guys are taking notes, if you guys are tuning in live, ask your questions, and we'll get them answered as best we can. Let's get going.
1, 2, 3, 4.
All right. So today we have Harris Trail and Neev Kanon. It's Kanon, right?
Yeah.
All right, perfect. So yeah, guys, really just want to open it up. I'll let Harris, you can start us off, but just kind of tell us a little, quick, 2-3 minutes about yourself and how you got into real estate.
Yeah, brother. Yeah, thanks for having me on. I love the intro, man. Whoever put that one together, they did a good job.
Appreciate it.
But yeah, a little background on me. If you guys don't already follow me on Instagram at Harris Trail, I've been in real estate for a little over 2 years now. Started a little bit before all the COVID crisis went down. Was doing wholesaling at the time, was also in college. So I was a full-time student and full-time real estate for about a whole year. Was partnered up with my other partner in this business that we're doing now, Ethan Newman. At that time, anyway, was successful for the most part in wholesaling. A lot of grinding, as I'm sure you guys know, hitting the phones, trying to figure out the systems and processes, really trying to treat it as a business and not just a hobby. Was able to make some good money from that, enough money to drop out of college and start pursuing it full time, going all in. Had taken some of that cash too, started getting into multifamily, was doing syndications for a little while. We're not necessarily focusing on it as much anymore. I'd like to focus on it more as time, frees up. Was doing syndications for a little while, learned a ton about underwriting, asset classes, really just kind of treating things or treating properties as assets for a syndication for investors to come in and purchase. Anyway, was doing that. Also was getting a bunch of JV leads at the time, and had met up with my man Neev and decided, working together, how can we optimize these JV leads that we had? I know both me and Neev were both helping wholesalers connect with hedge funds, but just kind of like on the side.
Right.
So yeah, we came together and we ended up starting a company, hedgefundcashbuyers.com. At the time, had no idea it would become what it's become today. It was kind of just, trying to help people out, connect to these funds. And man, it blew up and now we're here. And yeah, so that's the last 2.5 years on me.
Hell yeah, man. Neev, what about you, man? What's give us the 2-minute blip about Neev and what got you into real estate?
Yeah, man. Nice to see you guys again. Always good talking to you, Austin. My real estate journey started in the beginning of 2020. Just got out of the Israeli army. I moved back here to America, started wholesaling, started out cold calling for a friend of mine. That escalated into an acquisition role. That escalated into just running my own wholesale business. Had a successful first year, 2020. 35 plus deals in my first 6-7 months wholesaling alone. Start off in Texas. Now, we've slowly advanced, met Harris. And from there, kept wholesaling. Earlier this year, we joined forces, decided that, we're better off utilizing, obviously, each other, started kind of exchanging funds. And then that just escalated into this business. And like Harris said, it started growing and here we are.
No, that's awesome, man. So yeah, I mean, let's kind of dig into that, right? So obviously you guys were doing things completely separate, right? And I think, I think the common probably like assumption, right, is like, oh, you guys are probably like right next to each other in the same office and you guys met up at the gym or something like that. So kind of dive into that.
Yeah, man. The answer to this one, but
Right.
me and Neev live on the total opposite sides of the country. I'm in North Carolina. He's all the way in LA. We met over Instagram, actually. It was kind of crazy. And that's actually where I met you too, Austin. But just DMing each other over Instagram. I know he was working with some hedge funds. I was working with some hedge funds. So we were like, how can we grow our list, right? And just like kind of work together. And yeah, so kind of crazy. Instagram bringing people together.
Yeah. No, I think that's awesome, man. Cause it just shows like the power of, one, like social media, but also just like the power of proximity, right? Like, there's there's a big thing around where, you got to pay to be in the right rooms and everything like that. But like nowadays, it's not even about the room, right? Nowadays, it's just about really just who you're in contact with and who you're in touch with and who you connect with.
Friends of friends.
Yeah. Right. And so I think that's huge because, like, in case you guys missed it, like Harris literally lives in North Carolina and Neev literally lives in California, but they run a business together. Right. And so like to be able to do that is amazing, to be in, the times that we're in right now, to where like you don't have to be in the same office. You don't have to, be sitting right next to each other, but you can still run a successful business is incredible. So let's kind of like dive into, the business is hedge fund cash buyer, right? Hedgefundcashbuyer.com.
Hedgefundcashbuyers.com. Yep.
Yeah. So let's dive into like the inception of that and kind of what the, kind of what the idea was. And then, we'll get into a little bit deeper about like how it looks now.
So I still remember, and Neev, jump in here at any time, but I still remember that first call that we had. I was sitting in a Wendy's drive-through, and I was like eating a Asiago chicken ranch club from Wendy's, and I'm on the phone with this man Neev, and like keep in mind, both me and Neev we're both busy. We got a bunch of different stuff going on at the time. I was working on some multifamily syndications. We were still, getting in leads for our wholesaling company, et cetera.
Because at the time, you guys both had your own individual businesses running, right, and rolling.
Yeah, we both had our own individual businesses, and we were both just like friends, just like talking, trying to help each other out in whatever way possible. And this man Neev is just like, he's like, yo, Harris, honestly, dude, like, he was like, you have funds, I have funds. I know you're getting these JV leads. He was like, bro, let's just make something out of it, right? Like, let's try and take these leads and we'll join forces, and together we're going to be able to get way more deals closed than just by ourselves. And at the time, I didn't even know Neev was like a wizard when it comes to transactions, but that is his thing. Like probably the most elite transactions coordinator I've ever seen in my life, just in all aspects. But yeah, it just kind of started there where it was just one conversation where it was like, hey, I know I can get, I have wholesalers reaching out to me with deals all the time, trying to connect with these hedge funds. And you have the ability to get them closed, and go through all the hoops with transactions and et cetera. So from there, just started trying to formalize it and make it a business.
Nice. So Neev, let's talk about that, right? You said you're a transactional wizard. So what's kind of like elaborate on that, like what's he talking about?
So appreciate the stint, Harris. So yeah, I have a lot of experience dealing with different types of transactions. When I first started wholesaling, I really understood that as a low-level wholesaler, I was really going to maximize on my returns if I, knew how to double close correctly, how to assign correctly, how to work with these funds. And so throughout my wholesaling experience, I've always taken a very educational kind of, I've approached the transactional process with an educational mentality. I mean, I'm always trying to learn. I would hop on the phone to escrow officers. Hey, how does this work? Hey, how does this work? Right? What is a HUD? And, just been through a lot of sticky deals that led me to have this experience. Now, by transactional wizard, what Harris is referring to is a lot of times, with these types of wholesale deals, we'll be dealing with wholesalers who, might have multiple contracts in place, multiple assignments in place, and it takes, a very detailed transaction coordinator to be able to, organize a lot of these transactions where there's multiple wholesalers involved. multiple people know different things. And as a transaction coordinator, you got to kind of bring everybody together. And so that was one thing I was always good at coordinating with different escrow firms. I think it's a crucial part of, getting wholesale deals done. And especially if, you're a newer wholesaler, when you need to save $1,000, $2,000 here and there, knowing how to read a HUD correctly, knowing whether to assign, whether to double close, will help you in the long run. And it's definitely helped us,
Well, and to touch on that too, and this was something that at the time I had been working with hedge funds as a wholesaler, just trying to sell deals periodically to them. But I didn't necessarily understand the value of having good transactions coordination with these funds, because they will cut you off in a second. If you have a messy deal or a dirty deal, then you'll get blacklisted and you'll never get an offer from these funds again. And that's I feel like that's what's made our business so successful to an extent, is because our relationships with the funds are so strong now, because we don't have deals that get messy. We don't have, and if they do get messy, the funds never know. Like, we take care of it on our side.
Cleaning it up on the back end.
Exactly. And I think that's like the biggest value, especially if you're a wholesaler trying to sell to these funds, is like, you got to be on your shit, because at any point, they can cut you. And there you go. Thousands of dollars down the drain. Yeah.
So let's, no, I agree, man. Like, we've experienced it. I know, I've got colleagues that experience it all the time. They get blacklisted or cut, or, oh, so-and-so never responds. They do, just not to you. Right. So, no, I think that's crucial, man. Like, you've got to be, on top of your game. You've got to be, Johnny on the spot whenever, these funds are asking for something, or they're requesting documents or anything like that. But, so now let's back up a little bit, right? For anybody listening to this or watching this, what is a fund, right? Because I think, that like that phrase gets thrown around a lot, right? Especially like on Instagram and stuff like that, where people are like, yeah, we're selling to funds, sell to funds, sell to hedge funds. But at the end of the day, like, somebody just getting started, or somebody that, may kind of be doing like a deal or two a month, right? And hasn't really found that consistency, or, doesn't even know that hedge funds exist, right? Like, what is a fund? And then we'll dive a little bit deeper into like the benefits of, selling to them.
Yeah. I can answer this one, Neev. I mean, explaining exactly what a fund does we can go on for an hour.
Right. That's a whole different episode in itself.
That's its own episode. From a high level, if you're a wholesaler, you got to look into selling to funds. It's basically just Wall Street buyers, big Wall Street buyers that are raising up, hundreds of thousands, not hundreds of millions of dollars. I know Blackstone recently released an article. They're a big fund that a lot of people know of, just raised like $50 billion. And they're taking all of this money that they've raised and they're putting it into single family real estate, long-term rentals.
Well, and like in that article, like the exact verbiage was distressed real estate.
Exactly.
Like, and if you're a wholesaler or anything like that, like that should get you excited. Because like the exact verbiage coming from the top down was, they just raised this capital to deploy into distressed single family real estate.
Yep. So these big funds are raising tons of money and they're buying tons of properties, hundreds of properties a month. And that's why they could be so valuable, not only because, yes, they're actively buying and they're in a bunch of different markets, so you have a guaranteed buyer, but they're also buying in so much volume that they're able to be more aggressive. Their margins are lower, and they're able to, come in typically higher than a lot of other cash buyers, a lot of local guys, especially if it's clean and cookie cutter. So that's where like the real value can be made, is just in the extra cash that it produces. And yes, you have to work with the funds, because the funds, every fund has their own process, and you got to really kiss their ass if you want to get good offers. But if you do, then man, it comes back to you tenfold.
Yeah. I mean, and a lot of people too, like the follow-up question to that would be, how do they make money flipping these properties?
So just to add on to that, Harris, and to answer that question, Austin, number one, just to clarify, the word hedge fund tends to get thrown around very often. It's really a REIT, a real estate investment trust. And so, these REITs, what their goal is, they're looking for long-term investments, right? So they're looking to add to their ever-growing portfolios. They're not looking to exit. They're looking to hold these assets and make money off the cash flow. At the end of the day, I think that wholesalers, they don't exactly understand why these funds are willing to outbid other buyers. And I think the reason is because it's a competitive marketplace at the moment. And, these funds are, they're receiving money from another lender. And so every day that they don't hit their quota as far as what they need to buy, they're losing money on what they owe, on inflation, on their interest that they're paying. And so they're on a time crunch to buy these houses. And so as a wholesaler, if you understand this and you understand that, they are on this time crunch to purchase these assets, and, they're looking to purchase assets within a certain criteria. If you can cater to that, you can maximize on, the pros of working with these funds, which is, of course, like everybody knows, they offer typically the highest, they'll outbid every other investor 99% of the time. And as a wholesaler, especially in today's market, with sellers wanting more and local, mom and pop buyers wanting to pay less, that really is a solution to kind of keep your business running. And as long as you understand their goal, which is long-term investing, and you can align your business, with that goal of theirs, you're going to set yourself up for success,
Yeah, no, I mean, that's one of the biggest things too, is like, anytime I talk to somebody and they ask about it, like, I always just tell them, like, you got to learn your buyer's business strategy, right? Like, you got to learn what their business model is. You got to learn what their exit strategy is, because then why they're like, then how to price the deals, one, right? Like, how to sell it to them, how to price them. But at the end of the day too, you understand it, right? Like, because I think it's a big reason why, like, a lot of like people just getting started don't work with funds, is because they just don't understand it, right? And I think especially like as like an entrepreneurial mindset or anything like that, when we don't understand something, it's like freaky, right? We're like, it's risky, but that's where like
that back end too. I didn't mean to cut you off there.
No, you're good. Yeah.
Talking sometimes. Knowing that back end too, I feel like it helps you know what you need to offer on the front end.
Yeah. You can back your way into a deal.
Exactly.
Yeah, it's the reverse engineering, right? Like, where your buyers are going to come in. So now what kind of room you've got with your seller, right? Now what kind of offer you can make. Now like, okay, they didn't take, our first initial offer. We have, X amount of room to negotiate. So like, and again, I think another question too is like, what do you say to these people that are like, oh, funds are evil, they're buying the block, because I mean, you see those articles all the time, right? You see the fear mongers and you see, people like that. So like, what are you guys saying to those people?
Bro, I'm scared too. Like, honestly, they're buying up the whole neighborhoods, and home ownership is on the decline, right? And we're seeing this happening a lot in Europe, Asia. These hedge funds own like 80% of what's on the marketplace, and they're just holding it long term. Home ownership is it's nothing like how it is here in America. And America's trending that direction, and yeah, it's scary. But let's make money off of it, right? Like, if if the fund can take that money and give you an extra 10 grand in your pocket so that you can go and start buying your own rentals and holding them long term, that's how we combat it. We don't combat it by being on social media and not making any money off of it. You know what I mean? Like, that's
keyboard warrior.
Exactly. Like, let's capitalize on what's in front of us.
Yeah. No, I agree.
Just to add on that, here's the thing, man. These funds, I mean, Wall Street money, man, they're going to buy out all these houses, dude. And so it just comes down to, you're going to ride the wave, because this is the lucrative wave now, right? If you're a wholesaler, you're either working with funds, and if you are at a fund, good on your part, because you're about to own all of America. But the question is, if you're a wholesaler, are you going to capitalize on this mass acquisition of theirs? And also, we just keep in mind, I personally feel like they're stabilizing the market. The fact that these funds are buying, so many properties, what would the marketplace look like if the funds stop buying, if they all cut their acquisition today? I mean, you'd see a massive amount of new listings. I think, your average purchase price would decrease, buyer interest would go down. And so, from one point we could say, hey, these funds are currently stabilizing the market,
Yeah, no, and I agree. Like to that point too, right? Like I mean, at the end of the day, the houses that they're buying, they're listing as rentals, right? So they're providing housing for a lot of middle class America, right? A lot of your middle class, families and things like that, like they're providing, you know, subjectively, reasonable, affordable housing for them, right? And it's nice. They're in nice neighborhoods, nice areas, So, I, you know, that's kind of where like, and at the end of the day too, right? Like all these funds and everybody, like they have their little box, right? That they stay in, and like we'll dive into that a little bit deeper, right? But like they have their little box that they stay in, and like in my opinion, their little box is less than 50% of the houses in the country.
Oh yeah.
Right.
Probably like
Very
30.
way less.
Yeah.
Right. And so it's like to the people that say they're buying up the block or they're buying up whatever, right? That's just because you're so focused on the transactions and the volume of transaction. You're not focused on the mass scale. Because like if you look at it from a mass scale, they only own maybe 3%. Right. Yeah. And I don't know the exact numbers. So like don't quote that if you're listening to this, don't comment and be like, oh, I don't know what the fuck he's talking about. Like they don't own as much as like, what it seems like. Right. So that's my 2 cents on that. Right.
Yeah. I don't think you're not wrong either in the sense of, their buy box, what the properties that they're looking to buy is very specific.
Yeah.
And honestly, like later in this podcast, I'd like to touch on that as well. Just like watching what these hedge funds are buying, because me and Neev, as we're starting to look to buying rentals as well, we're following the hedge fund buy criteria.
Mm-hmm.
These funds are smart. I mean, it's Wall Street. There's a lot of people spending a lot of time trying to figure out what the ideal rental is, the least risk and the most reward. Yeah. And it's a formula, and there's different things that like,
and they adjust it all the time.
Oh yeah. All the time. But I mean, the basics remain, right? Like the the not on the busy roads, flat yards, no flood zones, like very things that most investors don't even talk about, to be honest.
Right. Well, and I think too, like, it's a good guideline, right? Especially for your flippers, right? Because if you want to be able to get competitive pricing as a local like flipper, go against the hedge fund buy box. Right. You want to be able to get good deals and still get good pricing and, still have volume, go after the properties that don't fit this box. Right. And I think that's what, like you said, right. The funds have these, they have full-time analysts on staff, full-time data engineers on staff, so they've got all these people on staff to do all this. So yeah, like they're going to find the ideal rental and the ideal, like we talked about, like the ideal middle-class rental, right? But that leaves so much opportunity for anything that's above that buy box or anything that's below that buy box.
Flip.
But what happens is so many people, because of what they're going after, so many people get so caught up in that. And then they're like, oh, they're buying everything. There's no opportunities on the market. There's no deals on the market. There's nothing. We can't find anything. But it's just because they're so focused on that. Whereas like if you go below it or above it, you dip into, semi-luxury, there's so many opportunities out there. And so I think it's just some of these local flippers and, companies are just getting so caught up. And honestly, I think it's just jealousy too, right? You see these companies just buying in bulk, right? Because that's what they're doing, right? They're buying hundreds of houses a month, and they're struggling to get 2 or 3. So but yeah, I wanted to touch on something too real quick before we dig deeper into the the whole hedge fund rabbit hole. So obviously, like both you guys kind of had your own things going prior, right? And now, we've talked, you guys are both full feed, full steam ahead with the hedgefundcashbuyers.com. So explain like that transition, right? Going from, direct to seller, marketing, direct to seller, negotiation to now, like you guys are basically like B2B sales, right? Yep. So kind of explain how that transition was and, what you guys struggled with, what was easy and, and, dive into that a little bit more.
So I guess I'll take this one. So having worked as a CEO, right, of a wholesale business, traditional, direct to seller, cold calling, call tools, the whole nine, buying lists, etc. Starting from that business model, transitioning to the back end mainly was caused by us mutually understanding that we need to follow the money, right?
Mm-hmm.
And so just like in today's marketplace, we're slowly, transferring into this buyer's market. We understood that we need to follow the money. And I think that in today's marketplace, as a wholesaler, you should follow the money, because as we, transition into this buyer's market, the buyer is of value now, right? So the buyer holds the value. And so if you have the buyers, you'll do more deals, right? And if you're, let's just say, currently wholesaling and you're looking to transition to that cold wholesaling, number one, you're cutting your marketing expense. So you're no longer cold calling. You're no longer, doing direct to seller acquisitions. Every lead that you're now talking to has a contract, right? And so instead of talking to 50 leads in a day, and each lead is a homeowner thinking of selling, well, now each one of your leads is a contract, right? So making that transition into, this business model was a very positive transition. Not only does it cut marketing costs, but just with the state of the market, it's the right thing to do. It's not an easy transition to make, especially if you're used to direct to seller marketing. I just think that it really involves understanding your buyers, and instead of focusing on finding the deal, and now I have the deal and I could present this, and this deal now has value, and I'm going to focus on the front end. Focus on your buyers first. The deals will come, because that's the market that we're currently in. And so transitioning to that, we understood that. We kind of foresaw it a little bit early. Glad that we made that transition, because, if you're a wholesaler and you're thinking of making that transition, now's the time, right? But there's always going to be a need for those direct to seller wholesalers. And there's always going to be pros and cons. If you're going to be, working direct to seller, you're going to be able to maximize on those really juicy big deals, because, you're not getting that deal from another wholesaler. You know what I mean?
Right.
Yeah. And I think to touch on that too, both of our wholesaling operations were successful, Neev. I mean, we both closed. I think you closed more deals in your first year than we did in ours. I think we did like 22 deals in our first year. You did like, what did you say, 35? Yeah. So, I mean, both of us were fairly decent at wholesaling. But it was still hard. Like, it was grind, man. Like, you had to grind to get those leads, and close those deals. And like, one thing that I think we really learned was that if you're having difficulty making money in your business, don't always just look at the systems that are in your business. Yes, you obviously want to look at the systems that are in your business. That's very important in your process and how you're doing things. But also look at your model. Does your model set you up for success? Are you climbing an uphill battle versus, an easier model that might, and in my opinion, I believe that going to JVs and trying to be a connector piece is a little bit of an easier model than going direct to the seller, for the sole reason being of, just like Neev said, instead of talking to 50 homeowners and one of those 50 might want to sell, and then you give that offer, you're talking to 50 wholesalers who all want to sell within 30 days, and you're getting offers on all 50, and then you close like 10 of them. You know what I mean? And it's easier conversation too.
Yeah, your lead to contract, your lead to deal. I mean, your like lead to close deal ratio goes significantly down.
Significantly down.
Right. Whereas like direct to seller, right? I think it's probably I would probably say 1 of 50, right? 1 of 45, 1 to 50 is probably about average. And where you guys are probably sitting probably like 1 to 10, 1 to 15.
One of 7 and 7.2 right now as of last month as average.
Yeah. So, I mean, it's literally going from, you got to get 45 leads to be able to capitalize and potentially make money on one. Because the thing is, with the direct to seller, right? Like you said, now you gotta negotiate. You get the seller in a contract, but then now you got to go find the buyer. You got to negotiate with the buyer. So it's like just getting it under contract doesn't guarantee you make money.
Yep.
Right. So whereas like now, like you said, every lead you guys are getting in, it's already under contract. Everything's already been negotiated. Now it's just a matter of like, hey, this fits the buy box. Boom. Now we can send it. Now we can get offers on it. And then, then you make it work from there.
Yep. And there's a million different business strategies that you can do that'll be successful. Selling deals to hedge funds is just the one that's worked for us. And it was kind of the one that fell in our laps because we had just worked so hard when we were wholesaling to get hedge funds.
Right.
We had this big list, but we weren't taking advantage of it to its full extent. But in the industry, I mean, think about if you're wholesaling, continue wholesaling. I mean, it works for a lot of people and it generates a lot of cash and you need that cash. But think about how can you also provide another service that services the wholesale industry? How can you service the main industry and be kind of a little niche off to the side that has a great business model and a great business strategy to where it can be a cash cow if you grow it to a certain extent? And that's just the question you got to ask yourself as an entrepreneur.
Right. No, I love that, man. So like, let's kind of dive in now, with the, like we talked about earlier, right? You said the funds have, buy boxes, right? And so they've got their criteria, that they want. So let's, I'll let you kind of expand a little bit more on, what is a buy box? Like how is a wholesaler, like, how does that affect you? And just expand on that.
Neev, you want to take this one?
Yeah. So for anybody that doesn't know, a buy box is a term that's used for buying criteria. And so buying criteria is simply what it means. It's criteria that these funds are purchasing within, right? And so if you've ever done a deal with a hedge fund, or if you've ever maybe had communication with a hedge fund rep, you'll know that they might have sent you, or you might have requested that they send you what's called a buy box. And it's basically a breakdown of what they're going to buy. So just to give you guys an example, one of the funds that we work with, they have a very simple buy box. They only buy properties that are built on or after 1950. They'll only buy properties that are 1,200 square feet or greater in living area. They'll only buy properties that are on sewer, no septic. So it's this whole list of purchase criteria. Now, these funds are using the purchase criteria to acquire. And if they receive a deal that's outside of their buy box, they'll simply reject it. Now, certain funds are strict with their buy box. Certain funds are slightly less strict with their buy box. Sometimes we'll do what's called a flex test to kind of determine, okay, how strict is this fund really? Meaning if they say they buy 1950 and we submit something or present something that's 1949, are they going to underwrite it? So that's more or less what the buy box looks like. And as a wholesaler, you should know, if you want to maintain a professional relationship with said fund, don't submit or present a deal that's not within that buy box, because, you as a wholesaler, what we're doing to provide value is we're filtering for that buy box. We're already pre-qualifying it. And so if you're a wholesaler submitting deals and you check that buy box before you submit the deal, the fund rep or whoever you're speaking to at that fund is really going to appreciate you. But simply put, just a list of criteria that you stick to when determining, what to send.
Yeah. No, and guys, we are live. So if you guys do have any questions, just put them in the comment section and we'll get them answered. But like the way that I like to look at that is like, it's literally just like they're literally just creating a menu, right? They're giving you an order and you just got to fill it, right? It's like if you go to a restaurant and you want your steak medium rare, they're bringing out well done. You're probably going to say, nah, I want it, we need to recook it, right? I want it medium rare. Same thing with the funds, right? They're telling you exactly what they want. And so now all you got to do is just find that, and get a good deal on that, right?
Yep.
And I think to your point, right? I think too many people out there get so caught up in the fact of like, oh my God, like we need the funds more than they need us, right? Where it's like they, yes, we have to have a business relationship. Yes, we have to have a working relationship. But at the end of the day, like it's a mutual need, right? They need us just as bad as we need them. because they don't have teams out there sourcing these off-market properties. They don't have teams out there doing that. We are the team, right? As the wholesalers submitting deals and working with them, right? Like, we are the team. And so they have capital, like you guys talked about earlier, that they need, like,
They
legally have to deploy, right? They will literally get in trouble if they do not deploy the capital. They will lose their funding, right? And so it's like we're providing that service and filling that order for them. And I think that's where, like, as wholesalers, we have to recognize that, like, we do provide value to these hedge funds. We do provide value to these Wall Street buyers. And it's not necessarily like a dependency, on them. Yes, they do pay the most. Yes, in most situations, the process is super simple and super easy. But at the end of the day, they're a dime a dozen right now. And it's all about relationships and how you work with them and how smooth and efficient, like you guys were talking about, your process is in working with them.
Yeah. And to kind of touch on that as well, especially that last part, you have to be with these funds. Yes, it's a mutual relationship, but you also have to realize that they're getting a ridiculous amount of submissions.
Yeah.
I mean, these reps are flooded with submissions.
They're going to work with who they like.
Exactly. They're going to work with who they like and who they know can close too, and who's professional. And I think that's where a lot of these wholesalers, because we have a lot of clients that come into our system that have funds that they say they send properties to, but the funds don't give them offers.
Yep.
And it's the same fund that we're closing like 4 or 5 deals on a month with.
Mm-hmm.
So, that's the benefit of having that relationship, and building that relationship doesn't necessarily just come with being on the phone with them all the time, because the reps, a lot of these reps, especially at some of the big hitter funds, barely answer the phone because they're just they're so swamped.
Mm-hmm.
You kind of have to build up to getting them to answer the phone by being on your email, being quick with the emails, having contracts in place, not sending them deals that aren't under contract, or sending them deals where it's a muddy situation with the seller or whatever, or sending them deals that are outside of their buy box.
Mm-hmm.
And that's the biggest thing to building these relationships, and kind of what I think has allowed us to be able to get so many good offers from pretty much all of the big funds. We don't really have any funds that have ghosted us, because they know when they get a property from us, not only does it fit the buy box perfectly, or it's right on the edge of the buy box, and we let them know that it's on the edge of the buy box.
Mm-hmm.
And we run the numbers ahead of time, so we know we're sending them good deals. But we also are just snappy with all the contracts. We have everything in place. We respond quick, and we do things by the book. And that's just the kind of way that you have to play with these institutions. Yeah.
Like, just exactly like you said, right? Because at the end of the day, they're institutions, right? They're not, Joe Schmo's flipping co. You know, like they're institutions. A lot of them are publicly traded REITs, right? So it's like they have a board, or they have, directors. They have other people they have to answer to. They have investors, they have lenders, they have all these different levels of, kind of ownership, right? And so we, as, let's call it what it is, we're a vendor relationship with them.
Yep.
Right? So now we have to, like, we're going to be vetted. We're going to be audited. Like, if anybody listening to this, or anybody watching this thinks that doesn't happen, you're wrong.
Yeah.
Right. They're going to go through their system. They're going to go through their CRM. They're going to go through their closed deals. They're going to audit the transactions. They're going to audit the companies they came from. They're going to go through and they're going to say, hey, this company sent us, 15 deals last month, but only 3 of them actually closed. Right. What's up? What's the issue? What's going on? Right. Like, they are doing that. Right. They're massive conglomerates or massive companies. They have the infrastructure to do that,
Yep.
and
you got to think they're scared about getting sued too.
Mm-hmm.
So, like, if you don't have your contracts and you don't have things done by the book, it's not worth it for them to get sued by a homeowner, by the homeowner that you end up closing the deal with. But the homeowner finds out that you did something shady and it wasn't right, and there was some clause and blah blah blah, and then who's Blackstone? I'm suing Blackstone, right?
Yep.
And that's the last thing these funds want, and that's why they have all of these
checks and balances.
Exactly.
Yeah. So let's kind of break down, y'all's business model, right? Hedgefundcashoffers.com. So kind of break it down, from a granular level. How does somebody work with you guys? What's the process like once they do, like what's the benefit, like give us your pitch essentially.
Okay. Yeah, I'll take this one, Neev. So it's hedgefundcashbuyers.com.
That's right.
If you submit to essentially we're just acting as a connector piece, right? So there's you and then there's us, and you send the deal to us, and then we send your deal to the funds. And we basically act as that filter to make sure that if we send your deal to the funds, it not only fits the buy box, there's not only contracts in place, but anything else that we need, any information that we need, the funds have it. So we're kind of that filtering piece that does that hard work for you. That being said, if you go to our website, hedgefundcashbuyers.com, you submit a deal to us, we're going to give you a preliminary range within 24 hours. So some of these funds, they can take, 2, sometimes 4 days, depending on how big and how backed up they are, to give you that firm bid. And yeah, they might come in, $15,000 over asking price, but you got to give them that little bit of time.
Mm-hmm.
We've just dialed in on the underwriting. We've sent them so many deals. We've talked with their underwriting teams. We know that generally speaking, what the calculation is. So we'll give you a preliminary offer up front, typically 24 hours. So you submit a deal to us, we're going to give you an offer within 24 hours. We're going to say, hey, this is what we can expect. Should we send it or should we not send it? Right. And if we send it, offers could come in higher or lower than whatever we said. But we're at least on the same page before we ever send it.
Right.
That being said, we work with 33 different funds right now, actively giving us offers. List is always growing. I mean, we got a ton of different funds that we work with and 29 different states, 30 different states. So yeah, that's the breakdown. That's the process.
Perfect. No, I mean, I would say right now too, especially with, the market constricting and the market, doing what it's doing, like we talked about earlier, like it is shifting to a buyer's market, and I think right now when it comes to as a wholesaler being successful and being able to like capitalize on any deals that you get, especially like if you're direct to seller, like a lot of that's just going to come back to how many people see it, right?
Yep.
How many eyes can you have on a deal? How many people can you have that can make an offer on it? Like, and I'm a firm believer in that, like, regardless if it's a hedge fund deal or a fix and flip deal, or regardless, like it's going to come down at the end of the day to what type of relationships you have, and then how many people see it and get the opportunity to bid on it. Right. Yep. And that I think is going to be the differentiator between who makes it out alive. Right. And then, who kind of fizzles their way out with the market, constricting like it is.
Yeah. And I think that's why a lot of wholesalers and we work with a lot of real estate agents too, but that's why they like our website specifically for the reason being of we're not a hedge fund, like we're not a fund. So yeah, you can send your deal to one fund, right? And that one fund could be temporarily paused in Florida for Hurricane Ian and not ever give you an offer. But when you're working with us, as long as it fits the buy box, we could send it to 15, 20 different funds, and 2 of them might not buy in Florida because of Hurricane Ian, but the other 18 will.
Yeah.
And then it's just a bidding war among all of them, and then you're getting the best price. So it's having options, right? And any business, anything is always good.
Perfect. Now, Neev, I would say, like, based on your background and everything, I would say that's probably a lot, has to do a lot with what makes you so good at the transactional side, right?
Mm-hmm. Yeah.
Coming from that military background and just detail oriented and process driven. I would say that's probably got a lot to do with that. So how have you kind of like built out the process on your end?
So yeah, and definitely, having a military background, I was a sergeant in the IDF. And so I was I commanded a group of 12 guys and, led them through training and whatnot. And so that always, that pushed me to be very detail oriented and very organized, which I think is an essential, trait as a transaction coordinator, as a disposition rep, et cetera. As far as our transactional process, I think it's very proprietary, the way that we go about these transactions on a simple level. Number one, just to kind of give you a breakdown of what it looks like for me, when a deal comes across my plate, it's already, been through underwriting. It's already been qualified. It gets to my plate. The first thing that I do is I vet the underlying purchase and sale agreement, right? And so, looking at the underlying close date, looking at the escrow firm on the underlying, making sure that, is title open? If so, has that earnest money, been deposited by the wholesaler? Is that contract actually binding, right? So that's the first thing that I'll check. Second step, I'd say, of the transaction process, once we vet the underlying PSA, is just qualifying, the additional details, things that I need to know, such as, sewer, septic, homeowner association fees, are the rental restrictions, really the bottom line red flags, important key line items that we need to know before presenting this deal. And, once we've obviously presented a deal, throughout this entire process, we're constantly making sure that relationship with seller A on that AB PSA, with, the wholesaler seller, how is that relationship? Are we intact? Are you in communication with this seller? Making sure that that contract is always binding. As a transaction coordinator and someone that's overseeing transactions, in any wholesale business, especially if you're co-wholesaling, that's your main priority. Additionally, on top of that, speed, man, working fast. Too many people, you get an email and you check it 20 minutes later. No, you get an email, you check it right then and there. You get a task, you do it right then and there. And I think that's such a massive component of being good at these transactions. And really, these buyers, their transaction coordinators, and these escrow companies wanting to work with you is answer your damn email. I see so many people that will get an email. Hey, escrow opens. I need such and such. And they'll just wait a day to respond. It's like, dude, answer your email. Be on top of your shit. Get it done, right? And that ties into, HUDs, reviewing HUDs, settlement statements, scheduling inspections. So be on top of your shit. As they say in the military, it's kind of what is the reason why, our back end is so killer. We keep each other accountable. And from a transaction standpoint, you have to do everything as quickly as possible because, especially when you're working with these funds, man, they have their own transaction coordinators. They're used to working with brokers. If you're a wholesaler, you're already slightly looked down upon. And so you need to make up for that with all of these little things, right?
Right.
So all in all, man, transactions, know your numbers, answer your emails and just work quickly. And, if you do that, I mean, that's kind of what allowed us
to set you apart.
Yeah.
Yeah. Because I think too, like, right. Like, I think as, people just getting started or like that haven't found that like consistency or like haven't like, because I think a lot of people, right. And, correct me if I'm wrong, right. But I think a lot of us, when we first get into wholesaling, it's looked at as like just another way to make money. Right. And it's not until we start thinking of it as an actual business, as an actual company, that we start really putting these processes and these SOPs in place. So like a lot of people, they focus so hard on getting the deal under contract. They focus so hard on finding a buyer, but they neglect the transactional process. Right. I can tell you when I first started, I damn sure did. Right. Like
same here.
I was so focused on getting the next deal. I was so focused on getting buyers in place that like exactly what Neev said, right? Email would come through from title and I'd be like, oh, let me get to that tomorrow. Or let me get to that in 30 minutes or
paperwork.
Let me eat lunch real quick and then let me figure out what they're asking for, right? So, and obviously like as we've grown, like that precedence has gotten a lot different, and like, to your point, like as soon as it like emails from title take precedence over any other emails, right? Because that's money on the line, but I think, to what you just said, like that's a huge value for, your partners and for these people that you guys are working with, because a lot of them are just similar to like what I was just explaining, right? A lot of them get an email from a title company. They're like exactly what Harris did. Paperwork, or they'll ask for something and they don't know what it means. Because let's be real. Okay. A lot of the people that are out there getting deals right now, they're not necessarily the most educated in the real estate, the back end process, the HUDs, the, different type of liens, the different type of judgments, how to clear a judgment, how to clear a lien. Like, and it's no knock to them. They're really, really, really good at finding deals, but they struggle with that right? They struggle with the administrative process. They struggle with the title process. So, that's just a whole, aside from finding the buyer, aside from getting them the highest offer, aside from, all of that, right? Just being able to coordinate the transaction in a smooth, efficient process is a whole different value in and of itself.
Yeah.
Right?
And just to add to that, man, sheesh, the difficulty as a new wholesaler of successfully coordinating a transaction. I mean, think about this. If you're a wholesaler, most of the time, let's be real here, I'd say 50% plus wholesalers aren't actually disclosing to the seller that they're doing a wholesale deal. Number one, let's make that clear, right? A majority of people aren't, hey, I'm wholesaling this. I'm finding.
I'd say 90% of new people.
Yeah. 90%. I don't want to assume, right? But let's call it 90. Most of these transactions, these escrow officers, you got to know, okay, what do I tell the escrow officer? The escrow officer's got to be briefed on what do they tell the seller? What don't they tell the seller? What do you tell the buyer? What don't you tell the buyer? Separate email threads, ABs, BCs. It can get real complicated. And especially if you're trying to scale, I mean, you're going to need to lock in that transaction process or you will not be able to scale, because getting deals is one thing. Like you said, finding buyers is one thing, but knowing the actual traditional, knowing the laws and rules in place surrounding real estate transactions, what you can do and what you can't, it's so crucial to get educated on that. That'll really, really, just help you, because we find so many wholesalers that they'll send us like an underlying PSA that's written on like a freaking piece of paper.
Oh my gosh.
No close date, no escrow firm,
No
nothing.
EMD.
Yeah. They don't even know what an EMD receipt, or they don't even know what title is. They just, they just expect to send it to escrow and get paid. It's like, you got to learn, you got to educate yourself on the side of real estate that most wholesalers don't educate themselves on, which is, the legalities behind a contract, what's binding, what's not binding. So I think a lot of wholesalers need to get more educated on this. And if you educate yourself, you'll find that you'll be able to use these escrow companies and title firms to your advantage, and, even have more exit strategies and whatnot, Yeah.
Neev, where did you go to learn? Like, how did you learn transactions when you were starting out?
Literally would just come down to me calling my escrow officer, chopping it up for 10, 15 to get the rapport going, and just talking for 30 minutes, asking her questions. Hey, what's this? Hey, what's this line item? Hey, why do you guys charge this? Hey, what is this recording fee? I could probably ask 99% of wholesalers that double close deals what their line items are, and, why are those charges there? And they won't even know.
Chance. Yeah.
No chance. Yeah. I wouldn't.
My escrow officer on these deals. I mean, I remember one time I told you about this one, Harris, getting a mobile home deal with multiple heirs on one, on one will, the title company's like, hey, if you want to do this deal, you need to contact a private investigator and, find out who these heirs are so they could sign on this addendum so you could sell this thing. I did it all myself, right? Calling my attorney, hey, what's this? What's that? So asking the right questions, trial and error as well. If you don't do deals and you just want to become an escrow officer or become a TC, I mean, you're not going to learn. It just comes down to trial and error, eating shit, going through those deals where you maybe lose money or you didn't read the HUD correctly. And one day you wake up and like, okay, I need to actually know what are these line items, right? What am I spending money on? What is a title commitment? So asking questions and learning from mistakes, I think, is what taught me, from a transactional standpoint, everything that I know.
And not being scared to ask the question, right? I think it's a big thing too, is so many people are so they're so scared to say they're wholesaling a deal that they don't ask the questions at all, right? Yeah. And they just assume that people understand what they're trying to do without any proper communication, right? I know a handful of people that's happened to, right? So I think that's huge, right? It's like you said, not being scared to ask the question and not being scared to just admit you don't know something.
Yep.
Right. There's so much power in just admitting hey, I don't understand this. Can you explain? Right. Yeah. And what a lot of people don't realize is a lot of time you'll build a deeper relationship with that person by having them explain something to you.
Yep.
Right. So I think that's huge, man.
Yeah.
Sick, guys. We're coming up right here on 55 minutes. So what is, one thing that, each of you guys want to kind of like leave everybody with, right? And, it doesn't have to be anything about real estate. It doesn't have to be anything about, whatever you guys are doing. Just, one piece of advice or one little tip that you want to leave everybody with. Harris, we'll start with you.
Yeah, I guess just to kind of wrap up what we've been talking about for a majority of this podcast, is take advantage of Wall Street, right? Like they're buying up hundreds of houses. Take advantage of it. It doesn't have to be through us. You can go on LinkedIn. You can try and, find these hedge funds yourself. If you want the direct connect, then, you can come to us. But take advantage of it because they're buying up hundreds of houses and they're netting, $10, $15, $20,000 more than your other buyers. And you can take that money and grow your business, scale your business with it. So yeah, don't miss out on the wave while it's here and while it's hot.
Hell yeah. Neev, what about you, man?
Yeah, man. I mean, I think the one thing that really sat on my mind and it's currently sitting on my mind is, if you're a wholesaler and you're watching this or, for any of us, understand the market, right? Don't be blind. Don't upload that same list to Call Tools and call it and just hope, right? Understand the market, follow the money, stay updated, right? Follow other people, continuously learn, never stop learning, and really just understand where the money is, where our market is at currently, and based off what value you can provide in the marketplace, where can you position yourself currently, whether you're a wholesaler and you want to transition to being a co-wholesaler, whatnot. Just find your value and how you can monetize that value and provide value to others, and you'll make the most amount of money right now.
Hell yeah, guys. Love it. Love it. Guys, now I appreciate you guys joining us for today. You guys want to sign off real quick? I'm going to pull you off the screen real quick and we'll wrap this thing up.
Thank you, man. It was
Thank
good seeing you, Austin.
All right, guys. Thanks for tuning in to another week of The Real Impact. Be sure to tune in next week, Monday, 1 p.m. Eastern time. And that's it, guys. Peace.